Hello everyone. Today, I want to share a major shift in my investment strategy. I've decided to sell a large portion of my individual stocks and move toward a more streamlined ETF-based portfolio. If you've been following my journey of quitting gambling and building real wealth, this is the most important level up I've had so far. Before I explain why I switched, let's define what an ETF, exchange-traded fund, actually is. Think of it as a basket of hundreds or even thousands of different assets, like stocks or bonds, bought in a single transaction. It offers three huge advantages. Diversification, you reduce the risk of one company's failure ruining your portfolio. Cost efficiency, they usually have much lower fees than traditional mutual funds. Transparency, you know exactly what you own every single day. Up until recently, my portfolio was massive. I had about 250 different holdings. Many were high-quality dividend payers, but as a European investor, I noticed a silent killer: taxes. On many of my US holdings, I was losing up to 20% of my profits to withholding taxes before the money even reached me. Over a decade, that tax drag is devastating. For every $100,000 invested, you could lose $8,000 to $12,000 in potential growth just to taxes and fees. That's when I realized I needed a more defensive, Graham-style strategy. This led me to the philosophy of Benjamin Graham in The Intelligent Investor. He argued that most people are better off buying the haystack rather than looking for the needle. To maximize my returns, I've chose Vanguard All-World ETF, called for short VWRP. This is accumulating ETF. How it works: instead of sending me cash dividends, which triggers immediate tax event in my home country, the fund manager automatically reinvests those dividends back into the fund. The result: my money stays inside the snowball, compounding faster without being chipped away by constant taxation. Now, you might notice my second choice, EQQQ, Invesco Nasdaq 100. The overlap, to be clear, VWRP already contains many of the tech giants found in the Nasdaq. The weight strategy, I'm intentionally adding EQQQ because I want to add extra weight to the technology sector. I believe deeply in the future of AI. And since almost every computer uses NVIDIA and everyone uses Google, I want a higher concentration there. Currently, my balance is 55% EQQQ, tech-heavy, and 45% VWRP, global coverage. This gives me a solid foundation of the world's oldest and largest companies while keeping a foot firmly in the future. This isn't financial advice. Everyone has different goals, but for me, moving away from the stress of managing 250 stocks and toward a buy and hold ETF strategy has changed my life. It's about slow and steady growth so I can focus on what matters: my time and my family. In my next video, I'll share the monthly income ETFs I've added to support my cash flow. If you want to see how to build a stress-free dividend portfolio, don't forget to subscribe. See you in the next one.